We are also going above the loop. This is where we might see some pause or little bit of a pullback, and you can already see the overlap between letter D and E. If you go to the shorter time frame chart, it shows multiple, 5 minute, 3 minute candles moving sideways. That is what we expect here. And if it holds, then you can use that no supply signals to position yourself for the up move, right? The correct way to use those signals is very simple actually. Let's say you wanted to buy here. So this is a no supply candle, this red one. So you are not supposed to buy anywhere but above the high of this candle. But we never go there. Then the next candle forms and we can buy above the high of that candle and you get this bar which goes higher. So you enter here and then market continues higher. Okay. And always remember, like you need to see some strength. You cannot buy above all the no supply candles because that will put you into a little bit of a trouble, right? So you need to wait patiently for the market conditions to set up and then you can look for an entry. I just gave this example. Like if you had these are no demand candles, the red ones, pink ones. So here, what I suggest is you sell below the low. So you never go below this low, but you do go below this low. And now you are short here. And market goes a little lower and it recovers and goes back and hits your VWAP. But obviously your stop loss is not going to be so far. It will be close by, but it is hit. Now, why this did not work? Because the context was not supportive. What do I mean by that? If you go to this chart, what you will see here is that this is the day we are talking about. What happens here? You have some movement in ABC period, but then nothing. So later on, any short signals later on, they were anyways not going to give you much because the trade facilitation was poor. Also, the first thing that sellers should have done is taken out yesterday's low, and they did not do that. So all this action was suspect. Now, I'm not saying market cannot fall. It can, but the probability of market falling sharply is much low. Okay, why is it much lower? Because we do not have the initial ingredients that are required for a bigger fall. Make sense? So contrast it with this situation. This is previous day's range. It is completely rejected. We open here, go a little lower, some profit booking maybe, and then we just simply continue higher. So this is going to be a trend day. There is huge potential for it to be a trend day because neither are we rejecting after a higher open and we are in fact extending range to the upside. So here probability of a bigger move to the upside are much higher. Here it was not. So the probabilities don't stack up here. So it was not a good idea to do that. Okay. Now, why I'm okay with today is because we have a 2-day range. We look below the balance. We have nothing. We have taken out HVN. We have taken out IB high. So there is a possibility of continuation higher going towards these highs. That is the reason why we will try to rely on these signals here. The point that you should never forget is that we are here to manage risk. So no matter what method you're using to establish your position, your focus should be on the risk, where you can define the risk clearly so that if your trade does not work out, you lose a predefined amount which does not affect your capital by much, right? And then you will be able to take more trades like that. See, now we have these no supply signals here. Now, ideally, you can buy above this. It has gone above that. So let us see if we continue higher or not. Where would you put your stop loss? Now, ideally, what I suggest is put your stop loss just below VWAP. But in this case, it is impossible to put a stop loss below VWAP. So now you can use a money stop. Let's say 50 points on Bank Nifty is not much. So you can put it here below this low. So this is 47,000. So 46,950 odd level, you can put your stop loss. And always remember, small stop loss, all right? Small stop loss is probably the biggest killer of retail accounts, right? What they do is they let's say you enter here, and then what you do is you do not give enough room for your trade to breathe. Sometimes what happens is we go higher, we come lower, and then we go higher. Okay. So now your stop loss is here, it gets hit, and then market reverses. So if let's say if I tell you to put your stop loss here, and let's say this is 47,000, this is 49,000, 46,900, and still below that. So 46,875. So this is 125 points. And even for one lot, this is, I mean, almost 2,000 rupees. Okay. So now if you cannot afford this, all right, if you cannot afford this stop loss, maybe you should wait for better opportunities. What happens, if you put your stop loss very small, let's say you put 50 points, then okay, you are only risking 750 points, but the chances of your stop loss hitting are much higher. And once your like stop loss is hit, then your confidence goes down. So maybe your stop loss gets hit here, it comes down a little bit, struggles here again, gives some no supply, and then continues higher, goes above this and even higher. Now what happened? You lost your money here. Now you don't have confidence to enter here. And then what you will justify? Okay, anyways, like I missed out on a big profit. Only if I could have kept my stop loss a little bigger. I mean, you can keep, 1,000 point stop loss. That does not make any sense. What your stop loss should be, a stop loss should be logical. Okay. So now if I look at this chart, what do I see? I see a big chunk of value forming here. Then we try to go higher, another chunk of value forming here, and now we are developing some value here. Okay. So what I know, simple auction theory principle, is that this micro balance is the next, or it is the last point of demand in this particular situation. So if the market has to go higher, this HVN should support. So what do you do? Logically put your stop loss below this HVN. Now if buying here and putting your stop loss here even on one lot is not feasible for you, avoid this trade. Because here what is happening is, even though logic and everything is working, the risk is not under your control. Many people, what they do is they'll overestimate their ability to their mentor's ability, or their method's ability to find great trades. So what they do, they'll say, okay, Dean says this, it works, I have seen it multiple times, let me buy here. And they'll put a close stop loss because their risk is not permitting. Ideally it should be here, but they put it here. Okay. Why? Because they don't have enough capital. And then despite all the past experiences, market does go down and hit their stop loss. And just when it hits their stop loss, it reverses and goes back up. Why is this happening? This is happening because smart money know how your psychology works, how your mind works, and they will do everything to trap you. Everything. So no two consolidations will develop the same. All right. You can see all the consolidations are different. You can see, just try to draw. They will kind of give you the same vibe, what they are trying to do, but each and every one will look different. Why is it happening? Because they are just trying to create that confusion in your mind and trying to put you out of good trades. Okay. Risk again is extremely essential part of your trading. And if you cannot respect your risk, or cannot understand how much risk there is in your trade, how much is it compared to your capital, then becoming successful consistently in trading might be a difficult task. All right.